another episode of Decoding IPOs by Finance and Investment Cell, Kirori College. Today we are decoding the IGCL IPO, what's behind the price band, what's the grey market is saying, and whether it's worth your attention or not. Let's dive in. IGCL stands for Indogulf Cropsciences Limited. They are deep into agrochemical manufacturing and marketing, crop protection and product cost across India and abroad. The company is also one of the few indigenous manufacturers of a herbicide with minimum purity of 97% in India and commenced production in 2018. It is also a growing exporter of crop protection, plants, nutrients, and biological products and exports its product all over 34 countries and more. Now let's dive into its financials. The IPO opened on 26th of June 2015. The close date is today, which is 30th June. Face value is rupees 10 per equity share and the price band of the IPO is rupees 105 to rupees 111 per share. The issue size is approximately 200 crore and the fresh issue is of 160 crores. Offer for sale is for almost 3603603 equity shares and the issue type is book building issue. The retail quota is approximately 35%, QIB quota is 50% and II quota is 15%. The application lot size for retail minimum is 135 shares which amounts to approximately rupees 15,000 and the maximum is 13 lot size which is 1,94,805. Now let's study the financial reports of Indogulf Cropsciences IPO. Now let's study their revenue, expense and PAT ratios. The revenue for the previous year was rupees 555 crores and the expense was 516 crores which gives us a net profit of rupees 28 crores and assets are rupees 542 crores. And the recent figures what we have are the revenue was 446 crore and the expenses were 438 crore and the profit after tax was 21.68 crore, but we can see an increase in asset which increases to rupees 597 crore. We also have the IPO valuation ratios over here. The return on equity is 12.19%. The PAT margin is 5.11%. Debt to equity ratio is 0.67, which is not ideal because the ideal ratio is 2:1 and the price per share isn't provided. Now let's do a peer group comparison of the IPO. In the peer group, let's compare it to Best Agro Life Limited, who has a earning per share of 44.94, PE ratio 12.23, net average assets is equal to 273.64 and the income is 1873 crores. We can see the PE ratio is definitely increasing of the peer group when we have compared it. The objectives of the issue was they are basically funding working capital requirements of the company and the amount will also in part be used to pay the outstanding borrowings availed by the company and general corporate purposes. So that's about it. It is a promising field, but there are certain limitations because there is not much increase in the profit after tax ratios of the company, so that must be kept in mind before investing.